Good morning, everybody. Hey, welcome to Wednesday. Guess what? It's the first day of April and the first day of the second quarter of 2020. This year so far has been a lot of uncertainty. And as we continue today, we're going to see more uncertainty in the marketplace. Hey, before we do get started, though, I want to remind you that one of the things that we put together and we believe in firmly is a financial x-ray. It's important that you know how much of what you're holding, how much risk do you have in your portfolio. Some of you may already be seeing how much risk, and you're realizing that it's more than what you thought, that you've seen a bigger downturn than you anticipated with this downturn in the market. And so that's where the financial x-ray comes into play. Give us a call. We can do things virtually. We can do Zoom meetings, we can do telephones. Hey, we are still available to help you through this process. Give us a call at 863-382-0037. Hey, Dave and I'm sure we'll have an interesting conversation as ADP numbers come out. Maybe construction numbers will come out before we get to talk to him. But looking forward to our conversation with him on the next click.
840 here. 20 before 9, we always check in on your money and find out what's happening to your IRA and your 401k. Checking in with Statler Financial Services. Phillip Statler is comfortably ensconced in his office this morning with all the skinny as to what's going on. Phillip, this is the unemployment count week, and you and I were talking, you discovered some interesting stuff about the unemployment rate we're going to get on Friday. And also the ADP report that came out this morning. We really aren't going to get a really accurate picture as to how bad it was in March on Friday, are we?
No, we're really not, Dave. And so, unfortunately, that number is, and I guess I never really realized this either, is that it kind of cuts off around the 12th of the month. That's why we can get our numbers so quick. From an employment number. And so we look at how well ADP has done, and we actually lost some jobs, right? Which we all pretty much expected, right? But we didn't have a clue of what the numbers really look like. But here, ADP is showing a job loss of 27,000 jobs cut. And so when we look at that and see how those are made up, the majority of those are coming from small businesses. That amounted to like 90,000 reduced payroll by 90,000 employees, mostly came from small businesses.
For everybody's reference's sake, ADP is the big payroll service that especially small businesses use on a contract basis in an effort to figure in order to keep themselves on track with payroll. The big companies, of course, have their own internal payroll department, so ADP provides a really good measure of what small business is doing, and they showed a decrease that would be less than you and I expected on the monthly number, but only measured through the 12th of the month. That kind of makes our entire figures for the unemployment count at the end of the week kind of hooey, right?
Yeah, it does. So small businesses lost 90,000 jobs. Of course, 66,000 of those came from employers that employ less than 25 people. And so, so that was, so obviously we had some people that made up a difference, right? So we had some manufacturing jobs. Mid-sized companies actually added some jobs, like 56,000. So we did see some adds, but the net was a minus 27,000.
All righty. And that once again is measured from February 12th to March 12th, which doesn't include the big cutbacks we saw in the first-time unemployment claims. And I gather the federal number that we get real quickly every month on the first Friday of the month is also going to reflect basically mid-month to mid-month. So we're not really going to get a picture as to how bad the economy has been hit so far until we get to the 1st of May, basically.
You're right. You're right. We won't know what that really looks like, other than, we will have the most current information that does come out and is accurate on a week-to-week basis is going to be first-time unemployment claims. That was at $3.8 million. I mean, that $3.3 million last week.
Yeah, the 3 point something million jobs lost last week, and we're going to get that tomorrow. And that, once again, is prior week numbers, so we'll get a picture of just how bad it is. You kind of made me drop my false teeth for a second there when you told me before we went on the air. Market expectations is for this week to show up even worse on that, I gather.
Oh yeah, I mean, evidently so it depends on who you look at and what numbers they're looking at. But one analyst that was quoted in the ADP report expected that when this is all said and done, we'll have 47 million unemployment claims.
Holy crap!
Yeah,
I've got no real intellectual sounding reaction to that other than holy crap. Set the table from yesterday. We had an off day yesterday. You kind of warned us we had a whole bunch of portfolio balancing going on the last day of the month. 410 points down on the Dow, 74 points down on the NASDAQ, only 42 points down on the S&P, but that boils down to between 1.5, a little under 1% on the NASDAQ and about 1.6% on the Standard & Poor's 500. It looks today like one of those test levels on the Standard & Poor's might get hit. You were talking about how there's always a hard floor in all of these indexes. Fall below it, you trigger a whole bunch of new computer programs. Standard & Poor's kind of has a floor right now in market minders' heads as being about where?
Yeah, about 2460. And, we closed at what yesterday, Dave? I don't have that number right here in front of me.
2584 and change yesterday. So about 120 points to go before we start hitting some hard resistance levels on that index. And so far this morning, it looks like we could be threatening it possibly anyway.
Yeah, we're definitely well on our way to get there today, depending on how things turn around and what differences are made. Now, some portfolios made changes yesterday. Some portfolio managers will make changes today. And so we'll see how that balances out. I did look to see kind of what's happening in terms of numbers coming out. Tomorrow's a big day. Obviously, we have initial claims. We have vehicle sales comes out tomorrow. I think that's going to be an interesting number.
I think so.
The other thing we have coming out tomorrow, before the market opens tomorrow, we have two companies that everybody knows, CarMax and Walgreens report before the market opens tomorrow. And then we have a couple household names that report after the market tomorrow. So that's going to be interesting to see how those companies did this last quarter.
CarMax being obviously bigger ticket consumer goods, and Walgreens, a company that's had some challenges over the last couple of quarterly reports. Both of them could be bellwethers for us.
They could be. That's going to give us some indications of what things look like and what kind of things we might be looking at for the rest of the reports.
Understood. Talking about balancing portfolios and whatnot, it doesn't look like at the moment that we're seeing an increased flight to safety at the very least. Well, take it back. Now it's on the way back down. I was going to say about 20 minutes ago, bond rates were actually up a little bit from last week, but now they're actually showing down, meaning there's a little bit of a run going on buying federal bonds at the moment.
Yeah, there are, and so when I look at the spreads here, we at least all the yields are positive still, Dave.
Nice.
Yeah, but it just amazes me though. The U.S. 30-year Treasury bond at 1.26%.
It's absolutely amazing, and that does tend to indicate by the fact that they're buying the 30-year bonds that there are a few fund advisors at the very least that are looking at this as being kind of a long slog.
That could be true too. Yeah, it's going to be a process. And hey, we talked the other day about companies. The government buying actual stock in companies, and so it takes you back to the old Chrysler days where the U.S. bailed Chrysler out by buying some of their stock. And so, if that happens more and more into bigger companies, especially like the airlines, they're talking about that now. How long is it going to take to get rid of the government back out of our business again?
Absolutely. And President Trump in a press conference the other day when asked about this said it's going to be a case-by-case basis, that in some of the companies that the bailout bill will allow the government to bail out, they may require some stock as equity as security for the loan guarantee. So, yeah, there is a possibility we might be in the airplane ownership business before too terribly long.
Well, and you know, we came out okay on the Chrysler deal finally, and I think that the government made back their money plus some, which they should, given what happened. And so hopefully that would be the same issue that happens with the airlines, that they're able to become profitable again. We'll be able to pay back the government and actually, you know, use and replace some of those given dollars out there to help reduce some debt.
Understood. Yeah, when we start, saber rattling and platin, pot banging over the notion of the federal government bailing out companies, it does help to remember that by and large, we've actually made money off of those government bailouts of private companies, haven't we?
Yeah, we have. You know, we made money off of Chrysler. We did make money off of AIG when we had to bail them out during the financial crisis. So I mean, I think I'm sure we don't ever hear about the ones where we lost money, Dave, but at least the ones that I have in my memory, we made some money.
Yeah, politicians don't like admitting when they lose their shirts on something, only when they do good things for the taxpayer. Funny thing about politicians, can't imagine, huh? Setting the table again between 1% and 1.8% down on the indexes yesterday, which you and I kind of were writing off to a certain extent for portfolio adjustments. I sure hope it's just adjustments going on this morning. 45 minutes before we start trading, Phillip, where are we going so far?
Hey, we're sliding pretty fast and furious this morning. We're down more than 3%, pretty much across the board. The Dow's down 3.5%. That's 762 points. We've got the S&P down almost 3.5 at 88 points, and we've got the Nasdaq, the best of all, down 2.75 at 216 points. So everything's going to open up to the red this morning. It looks like. We switch gears to the commodity side. We do see silver down about 1/3%, still above 14 at $14.10 an ounce. We've got gold basically flat right now. Crude oil down another 1%, Dave, $20.27 a barrel.
Oh, geez. I'm looking at world markets. Everything's in red ink again, following our lead from yesterday. Asia down between 2.5% and 4.5%. British and German markets, by and large, also selling off big time this morning. German markets are down by over 4% halfway through their day. Not what we had in mind. You make your living and make your life out of helping people keep their retirement secure, Phillip. How do I get help from you?
You know, Dave, we are in some turbulent times right now, and we are available for phone meetings. We're available for Zoom meetings. I mean, you don't have to come sit down in front of us. There's other options available, and we would love to chat with you. Give us a call at 863-382-0037 to start that process and to make a phone appointment. Catch us online at StatlerFinancial.com. A big deal is follow us on Facebook. Like our page at Statler Financial Services, where we'll put out information pretty much on a regular basis, where you can get information about what's happening in the marketplace. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on News Talk, 7:30 a.m.
And back here again tomorrow morning on Light FM. Phillip, thank you so very much. You have a good day for the rest of it, all right?
All right, man. You too. You have a great day, and I look forward to speaking to you tomorrow.
Thank you much, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that first page.
Folks, let me encourage you one more time. Take advantage of our financial x-ray. It's never too late to find out exactly where you are, and hopefully you've not had a big downturn in this marketplace. But give us a call. Let us walk you through the process of determining how much risk you do have in your portfolio and see what we can do. Even though we're down right now, what can we do to lessen that blow going forward? 863-382-0037. Folks, do it right now. Don't procrastinate any longer. Do it right now. Talk to you later. Have a great day. Thanks.